All right, here we are live right now. What I will tell people is we talked about the opening bell on Monday morning after the Thanksgiving that you rally up during the Thanksgiving week, and that Monday would be the beginning of a down day. And you can see that the Dow is down 80 handles, Nasdaq 100 down 9, Nasdaq Composite down 9, and the S&P 500 down 8 handles to 1401. This is a 7-minute opening bell. It is the Monday morning after Thanksgiving where they rallied it up on a very light week, and they have, and we're going to pull back into certain support levels and hit resistance levels, and then we're going to go from there. When you take a look at the 3-minute opening bell, and we're going to be very, very coherent, that Apple Computer made a series of highs once again at 577. Retail shopping is out on the name, and this is all on the opening bell. Here, on the 3-minute chart, the big move down in the Dow. That is a 3-minute bar. The Dow was sold down. It's at 12,927, down 82 handles right here. Your Nasdaq 100 on this opening bell is a gap down, breaking support level. Nasdaq 100, Nasdaq Composite, so everybody gets it right. Once again, down $9.80. The Dow still increases the selling, and basically during your Thanksgiving week, you rallied these markets much higher, but then to sell. Now, retail sales are out, and everyone is feeling good about that. Now, everything's going to be better than anticipated. The fiscal cliff is still in here. We told you how they rally up, but we'll also tell you that in the month of December, there's only this last trading week. The Dow history and or Wall Street, the month of December is the second best calendar month of the year for the upside. The problem is, even though that retail sells and people are out there shopping, that's good. Bless their heart, they do have the right to have higher wages, higher income, and lower cost of living, which they don't get. But here's the thing. We're going to have these ranges set up. This is all within 10 minutes of the opening bell. You can see here on the Dow that it's down 90 handles, and we're going to let that left elbow, meaning that people are still not happy. They're still not getting a fiscal cliff resolution. Hell, Greece is going to get a better resolution than the U.S., it sounds like. This is how markets work during holiday time. We put in the lows, and then we're going to look to see where the support levels are and where that bull, does he want to enter the market, or is the bull going to stay on the sideline? Are the hedge fund managers going to step in and buy? Our mutual fund manager is going to play catch up at year end. That's what year end holiday trade management is about. And for all of the people that underperform because they were stuck on stupid and they didn't perform, we already know what those numbers are. We're going to see if those people want to buy this market ahead of the Congress. Here is that 10-minute opening bell. We've got the benchmark MMTs. That's how that works. We're going to go to trades like where the apples are going to see where that money wants to come off the sideline. Does the trade change? We got 68 highs, but guess what? Got 86 lows. But you have a gap up. You had 571.50 close and a 573.71 low as of right now with the 577.71 high. On that Google trade, what we have right here live is we had that 667. I have that 570 call, which has come down in value on the Google trade, but the 660 call right here is hitting $6.40. I'm going to give a bid right now at $4.50 on the 660 call. We made a series of 95 lows, which we haven't seen, to support level at 659.02. Here is the 665 option call. They closed at 840. They've marked them down 100%. Yes, I do like that. I will put a bid out here at $2.20 right now on the opening bell. We would get a $6 markdown and make a boatload of money. This is live in 11 minutes of that opening bell on those Google options. I have put options that on the 580 put on the Apple trade on the opening bell, they close at 1305. 910 is a low, 1005. 1145 is the intraday high. It's a markdown. We are rolling higher based on potential iPhone sales. I'm going to keep this limit order out here. We are 11 minutes into the opening bell. I'm going to keep that limit order at 6.7. That way, that's 100% markdown almost. And I've got little risk. I already know that if we break the highs and go up toward the 580 strike price, I'm going to come down to that lower entry and I will be wholesale and I will make nothing. And nobody will stop me from making money on this entry because I understand how to steal that bid based on the trend. Right now, we got 77 handles, so all of the opening bell selling is finally hitting its bottoms. Now, there's going to be lots of rhetoric. This is how bear trends trade. Bear trends trade with increased volatility and price ranges. We are going to keep those live bids that I have given out, and then we will deal with it on 30 minutes on the hour. Once again, opening bell, 11/26, 2012, time is 6:42 a.m. Pacific Standard Time. What is this whole opening bell about? Is how do I square into my positions, either long or short, and then walk away with healthy profits?